Hello viewers, I know you've actually been struggling on making trades or being profitable or how you can trade within the day, because most of the times when you leave your trade over the night, like you sleep over your trade before you wake up in the morning, the market has actually changed each its direction and structure, and you must have lost that trade. So this video is about teaching you on how to become a day trader, teaching you how to become a day trader. That's making your trade only in the day. Probably you can just take out about maybe 2 to 3 hours in your day to trade, and when you are done trading within that 3 hours, you are done for the day and you are off the market. That is exactly how I started trading personally, because I was this type of trader that I most times I was a swing trader. I will put up a trade and I will leave it for 2 to 3 days and stuff like that. And within that 2 to 3 days, anything Elon Musk can just wake up, or Trump can just wake up, or Powell can just wake up and pass a news, and then the market will change its direction. But then I found a very suitable way that I can make my trade within the day and make profit daily. And then I built my strategy on it, and that's exactly what I'll be sharing in this video. So do well to stay to the end of this video, and don't forget to subscribe, like, and comment on this particular video. Equally share it to your friends so that they can get the exact knowledge you're about to get now, that will help you in this your trading journey. Now let's get down to business. First of all, before you can be a day trader, or before you can start day trading, you have to note some certain things. Number one, you have to define a strategy that you want to be using and you keep to it. Define a strategy that you want to be using and stick to it. That's number one. Then number two, identify a pair with a good structure. Not all pair. You don't trade all the pairs in the market. If you chase about all the pairs in the market, you keep losing money, because most pairs are very good in smart money concept, most pairs are very good in ICT, most pairs are very good in CRT, whatsoever concept. So you have to look for that one that have a very good structure that you can deal with. You've back tested this pair, and yes, it's actually playing out according to what you can understand in the market. That's exactly what you should do to identify a pair that will work for you, and then you stick to that one particular pair every day or 2 days, or okay, you can just look for 3 pairs. Before you know, within 3 hours, you must have produced up to the amount of trade you want to take for that particular day. Then number three, you have to trade majorly on many time frame. Many time frame, I repeat, you have to trade majorly on many time frames. That, because you're trading for 2 to 3 hours daily, you have to stick to the mini time frame. But then don't forget to start your analysis from the higher time frame, maybe from 4 hours down to 1 hour, then down to 15 minutes. But then majorly I trade with 15 minutes, 5 minutes, and 3 minutes, because I will be making a lot of trades within that 3 hours in order to make my profit for the day, and I leave. Then number four, I trade majorly. You have to target 1:3 risk reward ratio. That's 1:3 RRR. That's what you need to target per trade. Now, how do I do this? This is I'm exposing my personal strategy on how I became a day trader and what has been working for me. Now, number five, I normally take a total of 10 trades in a day. Pay much attention to these key numbers I'm pointing out. I will explain them with a pictorial view, and I will make some analysis on how you're going to start still in this same video. So do well to stay to the end of this video. Number five, sorry. I take total of 10 trades in a day, 10 good trades in a day. That's what I take. Now, taking 10 good trades in a day, you don't expect to win all of them. Yes, that's the truth. You don't expect to win all of them. But with this strategy, even if you win up to 4 in this particular in 10 trades, win 4 and lose 6, you will still be profitable. Yes, I will tell you how. Now, I take 10 trades in a day, then I'm targeting on 30% profit of my capital. Let me say my initial capital is about $100. I'll be targeting only 30% of it daily, meaning I'll be targeting $30 profit in a day. Now, if I repeat this for the second day, third day, fourth, and fifth day that the market will be open, I'll be having $150 in a week. That's if you stick to this strategy. So you don't need to be a good trader or a good analyst, or you don't need to win more trades in the market for you to make money. You can lose more and win less and still make money if you stick to your risk reward ratio and your you make your risk very constant. Now, number 5, you have to calculate your risk properly and keep it constant. Just like I said, any amount you're risking in any trade, you have to keep it constant. Now, let's make some calculation. Let's make some calculation on here. Let's make some calculation on here. Let's say you have $100 capital. You have $100 capital, and you want to be risking only but $5. I will suggest if you have $100 capital, risk only but 5% of your capital in each trade in a day. 5% of your capital. So if you take 10 trades, if you lose all, then you're not a good trader, because if you lose all, you're losing 50% of that total capital. That is 5% of $100 is about $5. That is what it is. So if you lose the 10 of them, you are losing $50 that day, and then you're not a good trader. That's the truth. You're not a good trader. So you should target on winning at least 4, and then losing minimum of 6. So if you win 5 and still lose 5, you are on a better profit. You've made more than 30% of your capital. Now let me show you how. Let's say you are risking $5 on each of the trade, and then you lose up to 6, and then 5 times 6 will be giving you $30. You're losing $30, and then you gain the rest of the 4 with your 1:3 risk reward ratio per trade. I'll be looking for 1:3 risk reward ratio per trade. Now 1:3, what do I mean by 1:3? When you risk $5 in that trade, you are expected to gain times 3 of it if you should win the trade. So in each trade, your profit target is $15 on each trade. Your profit target is $15, whereas your loss is $5. So let's say you win 4 of the 10 good trades you're taking in a day, which is 15 times 4. You're making $60 already, minus 6 of them that you lost, which is $30. You are still in profit of $30 for that day after taking the 10 trades, and you won 4 and loses. So you see, you can actually lose more than you profit in your analysis, and you still be profitable. $30 is already 30% of $100 capital daily. You move on to the next day. Now, because I'm a crypto trader, I most times trade majorly on crypto pairs. So I selected a particular pair that I know this particular pair is actually playing out for me, because I understand the strategy, and then I am dealing with that particular pair. Let's take, for instance, I'm making use of Super USDT. So when I come to my analysis or my chart like this, I majorly go to 1 hour time frame, because I said you should trade on smaller time frame. That is, I trade majorly on 15 to 3 minutes time frame, but I start my analysis from from 1 hour time frame. And then looking at this particular chart now, I identify that this particular chart is on a downtrend. Mind you, in every trade, in every day you come to the market, in daily candles, you must see at least 1:3 risk reward ratio from that particular day. Every candle of any chart or this particular chart must at least be 5 or 3% move, depending on anything. But even if it let it be 2% move, I will still find my 1:3 risk reward ratio inside of it. Then I will maximize it with leverage, or rather maximize it with your lot size. Now I already identified that this is on a downtrend, and then it has dropped up to two lines. It has dropped up to 2 points here and here on the downtrend. If you watch my video on trend line, you understand exactly what I am doing right now. So it has dropped up to 2 points. What did I do? Since it has dropped up to 2 points, what did I do? I'm expecting the third leg. Up around here, or rather, before it will get to this point, it should be hitting each third point around here. That's the point the third leg should be hitting, possibly. Now, because that third point is hitting around there, what do I need to do? I know that I'll be targeting to catch a trade around this zone. Now, because I'm targeting to catch a trade around this zone, and then this is 1 hour time frame, I don't trade on 1 hour. I have to move down to smaller time frame. But then I've identified that this particular trend or trade I'm about to take is on lower time frame. Now, sorry, is on downtrend. Now I moved on to my lower time frame. I went straight to 15 minutes time frame to see what I've got there. And on 15 minutes time frame, yes, I'm noticing a little change of character. If you watch my market structure video, you notice you know what I mean by break of structure and then change in character. This is a change in character here. And this change in character can actually be a break of structure in more smaller time frame. The more you reduce time frames, the more you see the picture of this market, the full structure of this market, the breakdown of the candlesticks. Now let me move down to 5 minutes time frame to see what we have there. And then on 10 minutes time frame, it is now very obvious that the market broke structure here. The market broke structure here. And then let's label it BOS. Let's label that particular zone BOS on 5 minutes time frame. Now, meaning after break of structure, we'll be expecting to retest back the zone that powered for the break of structure, and then boom, we are down. So this is the move we are expecting from this particular market at this point on the smaller time frame. But don't forget, it can still change on the bigger time frame if the market should go back to that zone quicker than expected. But then because we are trading on smaller time frame, this is one of the trades I'll be taking today. Now, but that's not all. Number one, 5 minutes break of structure already identified, which is my number one confluence. Remember, don't trade in isolation. I will always say don't trade in isolation. Make sure you have up to 2 to 3 confluences that will justify that particular trade you want to take. And now I already have the first confluence, which is the break of structure on the 5 minutes time frame. Now I'll be looking for the second confluence. Now, looking for the second confluence, I noticed that the thing broke out of a trend line, an uptrend line. If you watch my video on trend line, you understand exactly what I'm doing. So I took this trend line, I draw it this way. I drew the trend line this way. Perfect. Now remember, a trend line is perfect when it has touched at least 3 points, and this particular trend line has touched at least 3 points. This is the first point. It touched here the second point. It touched here the third point. It even touched here and did a fake out and then bounced back. That is that for that. I identified those and then I marked it out, and the trend line becomes my second confluence. Now, because it has become my second confluence, and at this point it broke structure at this it broke the trend line at this point. Since it broke the trend line at this point, I will now be looking for a place to enter the market in order to ride it downwards, because this trend line has actually broken. I will be looking to fall below to change structure from the uptrend to a downtrend. Now it has created a lower high around there. It has created a lower high around there. We will now be looking to enter this market upwards. So I will take my short position in this previous supply that sent down the market from here. Why I am making the highest traded point here my SL, and then making the lowest traded point here my TP. That is making here my TP, and making the highest traded point up there my SL. And now this trade, we already have 1:3.2. So exactly we got our 1:3 risk reward ratio in the first trade we are taking. So I'm just going to enter this trade and then wait for it to play out, and that becomes the first trade I'm taking for the day. Now you see that for this trade to get to this particular point is about 12:30. I'm making this video around 10 o'clock. So by 12:30, which is 2 hours 30 minutes, the candlestick must have gotten around this particular place that these vertical dotted black lines are. So a lot of things is going to happen within that 2 hours 30 minutes on this 5 minutes time frame. Even if you should move down to 3 minutes time frame, you still see a clearer view of what you are about to do. So this trade will become one of my trade for today. But then you have to repeat these processes. You have to repeat this process different times. Like this is one of the trades. You have to repeat it at least 10 different times in a day in order to get your full 10 trade. Even if I should lose this one, I might be right in the next trade. And when I'm right in the next trade, I am covering both the loss in this one. I'm only losing, let's say I'm using $100, I'm only losing $5 in this. And if I should get the next one, I'm making $15, which is recovering my $5 and then being on $10 profit. Now, at the end of the day, now let me tell you one thing. Let me shock you. Let me tell you one thing. Even if you should lose 7% of the time, like 7 times, and then you gain 3, you will still be profitable, but you will no longer be on 30%, you no longer be on the 30% profit for that particular day, but at least you will still see profit, you will not be in loss. Now let's make the calculation. Let's say this is 5 times 7, you lost 7 times, meaning you are losing $35, and then you profited the 3 times, which is 3 times 15, you're making $45. 45 minus $35, you are, sorry, 45 minus $35, you are still on $10 profit for the day. So the bare minimum is try to win at least 3 trades. Now if you make it up to 4 trades, you're good to go. You have banked your $30 profit of your capital for the day. So even if you're making use of $2,000 capital, then calculate the 5% of it and risk only 5% per trade, and 5% of it is $100. Risk $100 per trade, then you know you are risking 50% of your portfolio in a day. But if you're a good trader, you should not be afraid to risk 50% of your trader, because you know that yes, instead of that 10 trade, that is, you are risking the 50%, you at least you will be making, you cannot be losing the whole 10 of it. At least you should win at least 2, 3, 4. Then losing 6, you still be profitable 30%. And at the end of the day, 30% of $2,000 is how much? Is about $600. That's what you're making that day, even after losing 6 trade among that 10 trades. So that's exactly how I hack the cheat code on how to become a day trader, and I've been using that, and it's been working for me. If you find this video interesting, then go ahead and try this strategy I just exposed. But then it will give you a leverage. You no longer be leaving trade on to sleep over the night, waiting for the trade to get to wherever it wants to get. And when Powell wakes up and drops any news, the market totally change, and then you lose all the trade and all your money. This strategy will actually help you to trade only in the day, and during the night you are off the market, you sleep in peace. Then when you wake up in the morning, you repeat the same process daily. If you find this video very interesting, then don't forget to hit the subscribe button, and equally like this video and comment more, so that I will keep making more videos of this nature for you guys. And that is all that for that. Make sure you turn on the notification so that you actually not miss our next video. Come back to this channel to always watch this video anytime you feel lost. This is Ben X, and have a nice day. Cheers.